Okay, so here we have XAU USD, which is gold. All right, so first things first, I'm going to switch over to a semi-higher time frame, being my 4-hour chart, right? I'm just going to put everything into plain view, right? Okay, so what I'm going to do is I'm going to remove the wicks off of my chart, as I find this to assist me in terms of drawing my trend lines, right? So I exclude the wicks while I draw my trend lines, and then I re-include them, if that's a word. I include them back onto the chart after I've drawn in the trend lines. Then I can continue with my projections. Okay, so first of all, we see that with gold we have a bit of a trend that was forming here. I would assume that that was broken. That's all right. So let's just do this, and then we establish a point of reference. All right, now having seen that this area has been broken, and basically first of all, let me add the wicks again. Let's add some areas of let's add some areas of interest here, right? So first of all, we have a lower high formation over there, right? Reason why it's a lower high is because we came from a low point, right? And in making from that low point, we're ascending, right, in an ascending channel, so to speak. And while we're doing that, all these arrows are pointing to actually higher lows, not a lower high. Sorry for that. Higher lows, right? These would be your higher highs, right? Higher highs, meaning that we are in an uptrend, right? And the market is currently making higher lows. So this is another higher low, and then we see that we've got this momentum here breaking that low, creating a lower low, and this will be a lower high. We've got a lower high here. Here is our higher high. So higher high, lower high, lower high. That means that the momentum is changing. We are now looking at a possible downtrend. Now, in order for us to completely get to a point where we know that the trend is changing, there are some areas of interest that we need to see being broken. Now, for instance, this zone here was broken by this momentum here. And what we have here is after the break, right? This now tells us that we are now changing direction. We need to be looking for sell trades. Now, we need to identify an area of interest that could show us where the market could possibly turn, right? Now, of course, we want to get in at the highest point in order to sell, right? So how do I identify that? Now, we look at the last green candle, right, in that series, and we look at the first red candle that formed leading up to the break of that zone. So in this case, it'll be these candles right here. Let's just change that a little bit. Let's send it to the back so we can see the candlesticks nicely. Now, obviously, in order for me to take a trade, I would have loved to see the market rally back into this zone and then maybe create some type of formation here for the sell-off, right? But unfortunately, we did not get that. Now, this is based off of the 4-hour, right? Now, if on the 4-hour I have broken zones, I am now going to go to a lower time frame to find some confluence. Now, on the 4-hour, one thing to note is that we did have this retest of this trend line right here, right? We've got the first test, first point over there. We've got the second test, right over there, and then this is the third touch on that trend line. And some of you may know, if you didn't know, pay attention. The third touch on a trend line is usually the most powerful. That really sends the market turning or flying. If it was an ascending channel, really sends it flying. Now, since this is a descending channel, it really drops the market hard. And as you can see, the evidence of that from this point. So what I want to do is I want to show you guys how you are going to get the trade. So I would go on to a lower time frame. Let's just say the 1 hour, for instance, right? Now on the 1 hour, we have our trend line still in there. Obviously it looks a little bit messed up because we just changed the time frame, right? That's fine, nothing to worry about, right? But the zones are still the same. So this is our broken zone on the H4, right? We can see it being broken on the H1. Now I want you to notice how the market sort of accumulates back up into that zone, right? Now I want you to take a look at this area right here. This cluster of candles here means that there is some type of liquidity in this area here. So that cluster of candles will tell you that there's something going on in that area. And once we put that block around there, we can clearly see that the market reacted to that zone. Now, those of you who do know, you will notice that there was an M formation or a double top in this area here, being this one. And in order for me to confirm whether an M is valid or not, or a double top, whether it is valid or not, I make use of the 13 EMA. In my previous video, I did explain this and I will explain it again. In order for me to determine whether an M formation or a double top is valid, it has to break above the 13 EMA, break and close below. We have the close right here, a close below the 13, and then a break back above, and it must close above. And lastly, it must break below and close below the 13 EMA. And that close right below the 13 EMA is where I would generally enter the trade, right? Now, that's a short position coming from this candle right here. Now, where would be my take profit, right? My take profit is back towards this area here where the market started rallying in order for it to retest that area of liquidity, right? And as you can see that we did hit that area from this entry over here, and my stop loss generally wouldn't be so high. I would put it probably above that shift bar. So this candle here that actually closed below the 13 EMA, this big red candle here, is called a shift bar. Now it shifts away from the zone. That's why it's called a shift bar. It's shifting away from the area of interest. Now from there, I'd put my stop loss right above that shift bar, and in this case that would have given me about a 30 odd pip stop loss, and my take profit, seeing as how now I'm at an area of interest, which would be this whole number, the 1775 area. You guys know I trade zone to zone. So from here to that whole number, let's just refine it a bit, that would have given me about 100 and roughly, let's just say 180 pips. So a 30 pip stop, right? A 30 pip stop versus 180 pip TP. The risk to reward over there would be 1 to 5, 1 to 5.84, 1 to 5.84 risk to reward. And as you can see, we hit that TP without any real problem. The market, of course, did consolidate here and there a little bit, but that is why the trade was successful. Clear direction as to when you notice when the market is changing. Yes, of course, we would all love to take a sell right up here and potentially getting us even more pips. Let's just see if I took a sell right in here. It would have given me about 250 odd pips. Yeah, fair and fine. I made 180 pips versus 250. That would basically be about a 70 pip difference that I could have had. But remember, it's not about catching the very top, but it's about taking the right trade in order for you to maximize on profit. So whatever profit that you would have missed from taking a sell from the top here, you can easily get it in here. So this would be a high probability trade. Your objective is to take high probability trades. So if you were to take, let's say, for example, one lot from the very top here, and it's 250 pips, that's about $2,500, right? Now, if you took a one lot trade up from there down to this zone here, you would have made about $1,800. So you would have completely missed a whole $700 profit. So how do we recover that $700 profit? You just merely increase your lot size slightly, and you would be able to cover that deficit that you suffered from missing the very top of the trade. But it's not about catching the very top in order to sell. Yes, it's the best point to sell at, but the safest point to sell at was at this point here, because while the market is still making higher highs, you do not know whether this area is going to be respected, and you do not know whether this area is going to be broken. So this market, yes, could have sold off, but here where we identified a bit of liquidity, the market could have also easily gone to the upside. So it's not about you identifying the high and selling off of the high, but it's about you identifying a high probability setup. So this was just a simple way on how I would have taken this trade. And to be honest, I did take this trade, although I didn't take a full 180 pips. I only did take 100 pips because I have a daily target on my pip gain. So 100 pips is my daily target on pairs like gold, silver, and other very volatile pairs. Whereas on the GBPs as well, I would take 100 pips if it allows, but 50 on the GBPs is more likely for me. So I'd rather take 50 and probably lock some profit and try and take 100 pips. But this was just a simple video on how I take trades. I will be dropping more content very soon on how to identify liquidity, how to identify trends, and so forth. So also, please do comment, do like, do subscribe to the channel, and do share it, and do comment on what you would like to see me talk about in the next in the upcoming videos. So I hope you enjoyed this very short video, and I hope that you will enjoy the coming videos. Before I go, I just want to highlight something real quick. Remember, once we have a broken zone, right, we normally look for a retest, and here we identify another broken zone, and we actually are in the middle of a retest. So now if this 1 hour candle is to close bearish like this, I would go to a lower time frame to try and find more confluence and try and short this market. My next target obviously would be the 1750 area. So if there is some confluence for this trade and there is a possibility for me to take this trade, I definitely would take it and target 1750. I'll be honest with you guys, I actually do have a trade on it, a very, very small trade, but I will be looking for another retest in terms of confluence in order for me to short it even more, to gain confidence on that short. So I will update as to how that trade goes. I have sent the analysis to a couple of friends of mine, and I hope you guys found this beneficial. So do like, comment, subscribe, and peace. Catch you on the next one.